Good afternoon and welcome back to Your Financial Independence. So I got another SPAC stock that I'm going to be talking about today, a stock that I have been buying, and we're basically going to go through all the numbers and stuff. As you see on the screen here, the stock is HIMS and Hers Health, or the ticker symbol is HIMS. So I want to break this down as more numbers wise, what the company's doing now, the balance sheet. Because I think a lot of people or anybody that's watching this video is already bullish on the telehealth companies in general, which I really love Teladoc, which I'm going to compare this stock to Teladoc, which is basically a lot bigger of a company. I want to say Teladoc's around like 20 to maybe 25 billion. I don't watch it that much, but yeah, so we're going to be talking about HIMS stock today. If you enjoy this content, and only if you enjoy this content, make sure you subscribe and hit that like button. Without further ado, let's get on to the video. So as you can see on the screen right here, so HIMS stock is currently, or I think I took the screenshot yesterday, $8.21. I think today it was around $7.50. Go ahead and I'm going to post it later on in the video, but just to let y'all know, I bought 200 shares today, around like $7.50, and then I bought another 100 shares at like $7.42, I think. I think the stock ended up like negative 8.2% down today. So stock price, the way it looks bad. But as you see, we're going to get into the fundamentals of this company is amazing. And I also have some really exciting news that haven't really seen get posted a lot anywhere. So yeah, about $7.50. 52-week high was, I think, over $25. On the chart right here, those $23.99. So now let's get into some of the earnings and revenue estimates that Wall Street, key on that Wall Street has for this company. They could miss, however, they can also beat. So the earnings estimate, we're just going to go with the average estimate. Current year at 38 cents of a loss. Next year at 19 cents a loss. One thing I do want to point out here is I want to say it was the CEO. They basically, no, it was their CFO. He said on Q4 of 2022 fiscal year that they're expecting to break even and basically either barely lose money or start being profitable past that. So essentially 2023 and beyond, it's going to be a profitable company. They may have a couple bad quarters here and there, just like every other newer, startup company. So yeah, and we'll get in later. The gross margins is insane for this company. Revenue estimates. So this year about 264.38 million. I just went over their earnings call. I read like I listened to the last two. I kind of like doing that to catch up on the past events in the company before I start investing. So where are we at? Average estimate, 264.38 million. They've raised guidance, so they're more than likely going to beat that. Next year, 350 million. I will say if they stay on this kind of growth and a lot of the news that we're going to start covering here in a second, next year I wouldn't be surprised if they beat 360 million on revenue. And this is top line once again. And maybe a little bit far of a reach, but maybe 375 million. If you are interested, I've done it basically on my homework, but I can make a video about it. Is kind of like a revenue forecast, what I see for this company, and then price to sales ratios. If you're buying the stock now, look at some of my previous videos, and you can see what I'm talking about. And once again, all this is my own opinion, just like basically every other YouTuber out here. And so now so for those numbers, those growth metrics that we just went over right there, you would expect you're going to be paying a 10, 20 PE, which is basically, go ahead and, later on in the video, we'll get into Teladoc, but you're paying a 10 price to sales for that. So for him and Hers Health, you're paying a little bit, or basically right now with the stock, how down it is today, less than a 3.5 price to sales, which for the amount of growth that they're having, a lot of the news that's been breaking, their earnings call, moving guidance up, that's not that expensive. So now let's get into the numbers a little bit. So online revenue, this is one of the key business metrics, or something to gauge the company on. This is what's really important to this company. So we're from June 30th of 2021 till September 30th. So 58 million to now 72 million. So a lot of growth right there. Their wholesale revenue is down, but once again, look at how small percentage of revenue that is, which they announced deals that they're in Walgreens. I want to say now, I don't really care that much about that business model. It's kind of like a cherry on top if that does grow a lot. I'm really keyed in onto the online revenue growth of this company. So total revenue 60 million to now 74 million. And once again, this is literally just one quarter. So now one thing that I've been preaching a lot on this channel, basically any kind of long-term investment, is that a balance sheet is going to be key. Obviously, you want those stocks that have a story behind it, a path to profitability, but balance sheet is a very key metric, or something that you want to be looking at, like to kind of gauge the company. Maybe how big a position you want, how small, how risky is this position. So the cash and cash equivalents, which is what I really like paying attention for on companies, is now up to almost 65 million. And as we go down here to, where is it? Current liabilities, so total current liabilities, 52 million. So as you see here, they have more cash and cash equivalents of basically 5 million, than with $52 million of total current liabilities. Once again, current liabilities, or basically total current liabilities, is like a debt to the company that they have to pay this amount of money off in the next coming 12 months. So that's a good way to look at it. And then we can also look at the total assets. This is another good thing to look at, the entire total assets. So $420 million to total liabilities of $65 million. So they have plenty of assets. I mean, quick math, like what is that, like 5 or 6 times the amount of total assets and liabilities. So that's amazing for this company. So to get into some news that just came out on the 17th, HIMS to offer its health and wellness products on Amazon US stores. And I want to say I took a picture. Yep. So this will offer Amazon customers a variety of HIMS personal care products, including HIMS top-selling biotin, immunity, sleep gummies, which is basically melatonin, collagen powder, supplement, sexual health, and wellness products, including HIMS, the little toys that you can buy right there. Got to keep it clean on this channel. And then basically, let's see, the hair mask, scalp scrubs, and then they're also doing a 2-pack bundle offer for HIMS thickening shampoo and conditioner, as well as hers shampoo and conditioner. So this is, going to obviously bring up their revenue. They got an Amazon store now, so that's really important for this company. And then I didn't take a screenshot of this other one, but this is really important here too for any new customers or the existing customers. Is HIMS unveils the mobile platform to over 500,000 subscribed members. So basically members that are already using this company. As I said before, we were talking about Teladoc a little bit. And maybe it's a little bit more risky investing in HIMS than Teladoc. Teladoc's well established, all that good stuff. They already have a lot of partners. But in telehealth, the thing that I see being very bullish over the long term, higher profit margins, basically the company's making more money, which will in turn make us more money as long-term investors, is B2C companies. I feel like obviously that's going to have higher gross margins in general. Just in case y'all don't know, I got it pulled up right here. The term B2C is what it's commonly referred to as, but business to consumer refers to the process of selling products and services directly between the business and consumer. So the business makes it, you order it online in an app, think of Tesla or something like that if you order a car, and then the car or whatever you order online gets shipped right to you. So yeah, that's basically, I hope that's a good explanation of that. So now look at Teladoc, and this is a B2B business model. I know you can probably guess it, business to business. So that's basically a business makes a product and then it ships to another business and then they sell the product to the customer. So as you see, for that middleman to exist right there, they have to make some money. Where does that come from? Well, the first company's gross margins. That's a good way to look at it. So hopefully that explained that decent enough to where if y'all didn't know, now you do know. So now let's look at Teladoc. Teladoc had a really bad day today. The day I'm recording, which is Thursday, November 18th. I want to say, because I watched Meet Kevin's close video. I want to say they were down like 10%, which is crazy or something like that. So yeah, probably around 130 or maybe in the 120s for Teladoc Health, which is it's getting to a decent valuation, a lot better than I want to say it was like $300 and something at one point, which was crazy. So now, him and hers, I want to say it's about $1.5 billion market cap. So you're paying a lot more for this company. They obviously have a lot more revenue, stuff like that. So yeah, that makes sense. Market cap of $22 billion, basically. And as you saw back, analysts are expecting, I want to say like 30-something% growth for next year for him and hers. And that was with a 3.5 basically price of sales. So Teladoc Health has after today, probably a 10 price of sales, which isn't that, it's expensive, don't get me wrong, but it's not like a Palantir, which I am a shareholder of Palantir, but I'll admit it's really expensive, but I see where the company's going. And so you're paying a 10 price of sales for a company that has less growth. Yeah, maybe it's a little bit less risky, it's more established, but I see the better pick being him and hers is basically what I'm getting at. I don't know when Teladoc is going to stop marketing so much, and they're gaining market share. That's really important. But I don't know when they're going to become a profitable company. I have no idea when. So this year they're looking at basically $3.15 of a loss. Next year, basically $1.50 of a loss. So maybe 2023, they pull, break even, maybe a little bit of a profit on the high side. So revenue estimates. There is a lot of analysts covering this stock, so 27. Average estimates for this year is $2.02 billion, and next year $2.58 billion. It's good growth, I won't lie. 27% though, I would like to pay a lot less. I would like to maybe pay, this is what I would like to do, so obviously, you would like to purchase this company for $10 a share, but yeah, that's never going to happen more than likely. For about 30% growth, that's really what I would like to look at. Maybe a 4 to 5 price of sales, which him and hers is 3.5, so it's already way beating that with good balance sheet and stuff like that. Won't waste too much time on here. This is Teladoc, just to give you as a comparison. So their cash and cash equivalents is about $826 million with current liabilities of $302 million. So yeah, good balance sheet too. Just wanted to show you all that. That way you can kind of compare. They're both good companies in my opinion. There's a lot more growth in one, a lot less risk, and a little bit less growth in one too. So what did I do with this stock today? I want to say yesterday I bought 100 shares. As you see here, I bought 100 shares at 1:40 p.m., another 200 shares at 10:42 a.m., and then 1:40 p.m. I bought another 100 shares. I want to have at least two, maybe the 2,500 shares of this company. So once again, I'm going to slowly buy. That's the way I like doing it. Just in case the stock goes down to what I think the 52-week low that I saw was like $6.70 or something like that. But I think this company for the long term, at least half decade, 5 years, I believe this company, it doesn't matter that much. If you pay $7.50 or $9 a share, like over the long term of things, like, yeah, obviously you would make more money at $7.50 than buying in at $9, but it's not that big of a deal whenever you look at a longer scope of things. So I believe anything, honestly, once again, up under $9, anything's a buy. Like, if the stock's doing good and it has like a 15% pullback or 5% pullback, I'll probably just buy 100, maybe 200 shares, depends on how I feel. If the stock goes below 7, if it starts hitting with anything on a 6 on it at the beginning, yeah, I'll probably pull the trigger on like 300-400 shares at a time at that point, because I like buying higher the lower it goes. So yeah, this is it. I hope y'all enjoyed this video. I know there's a lot of fans out here for him and her stock, and I'm proud to be a shareholder now. So I hope y'all enjoyed this video. Make sure you hit that like and subscribe button, and catch me back on the next one.